Hello, Oracles. Well, today we got the Yieldmax payments announced. We will get into all of those numbers in just a minute, but we did end up seeing a little bit of a run coming back after an early morning dip after yesterday's nice run that we had seen. Now, tomorrow we are going to be getting a very important macroeconomic data point, which is going to be the jobs report. This is something that the entire market is going to be paying attention to because when we get that report tomorrow, this is going to give us the indication if the Fed is going to be pausing or potentially raising the rates one more time of 25 basis points that they have alluded to at their last meeting. So if we get some signs of a softening job market, we might end up getting a pause. This could be a very good indication for the market to continue running some more. Again, right now the market is pricing in a little bit of a Fed rate coming up one more time, but if we get that soft jobs report, it's a very good chance we do not get that. That tells the market that no more rate hikes, we have officially hit pause, and then we can melt up. So that comes out tomorrow morning, but in a minute we are going to get into all of the Yieldmax payouts and what they could mean for the rest of this month. But first, as always, we will look at Tesla stock itself. And again, we closed over 260. This was the very important number we wanted to close over yesterday. And even though we dipped today, we came back up and closed over it again today. So again, if we get a good jobs report tomorrow that the market wants to see, I can almost guarantee we are going to run up from here and definitely close over 260 to close the week out. So looking at all of the Yieldmax ETFs, we've got TSLY, TSLY coming in closing at 1432. And that is a very nice close to see on the day considering what we are going to be getting tomorrow. Now don't forget tomorrow, all of these payment amounts that get announced, this is what these stock prices are going to drop by tomorrow. So don't freak out. I'm actually utilizing tomorrow as an opportunity to buy more of these myself. Now, the biggest winner, which we will get into in a minute with the payout amounts, is Coney, CONY. Now, you see a giant green candlestick here today. I'll show you in a minute why we saw that giant green candlestick, but that was up 2% on the day. NVDY is another one that I own that closed at 22.53, and AMZY ended up closing down 1%, but is up 2% after hours. So those are the four biggest ones. Yieldmax now does have a large selection of options to choose from. I'm sticking with the top four myself. They are expensive to own. There's a lot of risk behind them. So for me, if I'm not going to be getting a massive yield out of them, I'm not going to be purchasing them myself. Everyone has to do their own due diligence, do what is right for their own portfolio. But these to me are just the jump starters for my long-term growth and dividend growth portfolios because I want to get the growth. One thing you do not get out of these Yieldmax ETFs is any growth whatsoever. So when you're looking at companies like Tesla, NVIDIA, AMD, Amazon, these companies are going to grow significantly over the next decade. Yieldmax ETFs are not going to grow at all. If they do, it's going to be very minimal and it's going to be capped. We have already seen that happen with Tesla this year, nowhere even close to what the returns are for Tesla stock itself. So again, for me, and I'm already updating my dividend game plan, which I recognized was missing a lot of that growth. I am putting a lot of that back into it. I'll be sharing that out with you guys, anybody who's members and patrons. I already have that pretty much done. I'll be sharing that with you guys this weekend. Everyone else at the end of the month, once it's all updated and finalized, I will share it with all of you. But again, Yieldmax are going to be awesome to bring in that cash flow generation to be able to buy a lot of those growth stocks that I want to buy, but it's not going to grow along with it. So in the long run, my returns would not be anywhere near as good as they would if I did not buy the growth stocks and stuck with just the Yieldmax ETFs. So here it is, the big winner of the day, CONY. This is the Yieldmax ETF that is based on Coinbase. So yes, with all of the volatility that you get from all of the cryptocurrency, you are going to be getting a lot of volatility with Coinbase. That in turn is going to give you massive returns when it comes to options. So CONY, the yield is 74.88%. The payout was $1.20 per share. And so if we run down the entire list of all of the Yieldmax ETF payouts, here they are. Tesla at 57.69 cents per share. My guesstimate on this was 63 cents. So I was off by about 8%. Not awful, especially considering the volatility of this. I am going to work on trying to get more accurate numbers. I'm pretty happy with being that close to this. So going forward, I will continue what I'm doing and I will share with you guys because honestly, it wasn't off by that much, 5 cents. I'm happy with that. ARK, OARK came in at 33 cents a share. APLY at 47 cents per share, NVDY at 67 cents per share, AMZY at 63 cents, FBY at 45 cents per share, GUI at 39 cents per share, NFLY at 50 cents per share. Again, the big winner CONY at $1.20 per share, MSFO at 28 cents per share, DISO based on Disney 26 cents, Zomo based on ExxonMobil, 28 cents, JPMO at 25 cents, and there's still AMDY and the PayPal one, which are not out for distribution yet. These last two may also pay well because the volatility is high and there's a lot of options that trade on them. But I'm going to pay attention to see. I own AMDY. I do not own PYPY. I'm going to wait on that one and see how it is. But you can see all of the percentage gains here. My rule is that I'm not going to be purchasing anything unless it's over 30%. There are quite a few over 30%, so I'm going to be picking the highest. Right now, I have TSLY, which is 48%. I have NVDY at 36%. But looking at AMZY jumping up, I'm going to monitor both of these. I'm going to keep them both. I'm going to add to them both, but I'm going to see which one ends up being more volatile and ends up giving a better return. Then down here, we have NFLY at 36%, also doing well. And again, the big one, CONY at almost 75% return. That is absolutely madness. So that one there, I am definitely adding heavier to. And again, I will wait to see what AMDY and PYPY come out as before I go and add more to those. So now when I'm looking at the top of my list, when it's going to be coming to what is going to be the biggest cash bringers to be able to funnel down that snowball into my other plays, is going to be top 5. I was going to do 4. I'm kind of at 5. I'm toying with some options. I kind of want to see how they all play out. This is all very new. I mean, the first Yieldmax is TSLA, and it's not even a year old yet. So in following my spreadsheets and my charts, I'm starting to see some patterns getting formed. So the way I'm going to be playing this out is if it's going to be below the middle of the range, I will drip the money back in. If it's going to be above that, I will drip that money into some other plays, depending on where those are at the range, or maybe it's going to be for some of my longer term growth plays. That's what I'm utilizing this money for anyway, is just going to be reinvestment money. It's not going to be growing these at all because, again, these do not grow on their own. Now, there's some other plays out there as well. The Defiance ETFs, that's QQQY and JEPY. Those two have amazing payout percentages as well. But again, those are not going to give any growth. It is strictly for income. So for me, again, not financial advice, but for me, the top 5 plays for me are going to be the highest yielding plays so that this way I can get the most money back and put it back into other plays. KLIP is another one, kind of paying attention to it. It's based on the Chinese economy, which has not been doing very well. But with that play there, it's still yielding quite significantly high, over 50%. So I don't want to sell my position yet. It looks like a long-term yield trap, not entirely sure. Again, that's still a newer play also, but it's still paying out fairly well. It just paid out 75 cents per share last time around, and it paid just over 80 cents per share the last 3 payouts. It's been relatively consistent, and the NAV erosion doesn't really come down as hard as it was in the beginning. So for me, I'm just going to eyeball that one. That's going to be on my radar for the top 5 potentials. But there's a lot of good products out there to get. But again, be very careful with them. Be very cautious. They're very new. And in talking with Darth Dividends, it's looking like almost like everybody's moving the money to the next hot thing. So right now, the hot thing is CONY. That gave almost a 75% yield. So there's money moving from a lot of stuff that wasn't doing as much. I did it myself. I sold out of my JPMO and my OARK, put all of that money into CONY. Now, tomorrow, when we are going to be getting the X date, CONY is going to be dropping by $1.20. So I've got a lot of other plays that I had in my portfolio that I'm going to be selling tomorrow and moving that money into TSLY, CONY, QQQY, and JEPY. I'm going to be balancing those off to put money up there to get some better yield faster to start the snowball moving even faster as well. That's my current play. That's how I'm doing this. And knowing that we're going to be getting massive discounts tomorrow on these Yieldmax ETFs, I'm going to utilize that opportunity to buy at a much lower price to bring my cost basis down. Because in turn, as I was talking with Gort, he ended up buying in around $13.28 on TSLY. That there, now he is going to be positive in the green and get a massive payout on these. And that's ideally the position you want to be with these Yieldmax ETFs, is both green and getting those payouts. Because if you're red and getting those payouts, how I was for the first couple of months that I owned these, I was basically break even. And I was constantly waiting for the next payout to get me to into the green again. And then it would fade a little bit because we were on that downswing. Now we seem to be back on that upswing again. So it's going to give me the chance to bring down my cost basis and get back on the green side of things while still collecting those dividends. That's how Tesla has been playing out so far. We will see if that does continue, and we will see if the other Yieldmax ETFs play out in the same manner. So let me know your thoughts in the comments below. What Yieldmax ETFs do you guys own? Do you own any other high yielding ETFs as well that maybe we did not mention on this channel that you can share down below? I would love to look into those and see what else is out there for options. So thank you all so much for watching. I appreciate all of your support. Have a great one.